What's going on YouTube? Dennis here with another investing portfolio update. Today I'm going to take you through my M1 Finance portfolio so you guys can see how it's grown over the last few weeks with my dividends and my growth stocks. Now, today's episode is brought to you by Earnest, which is the student loan refinance company. I'm going to have a link to them in the show notes down below for you so you can learn how to refinance your student loans entirely for free and save money on your interest rates to do more investing or anything else you need to do with that money. The nice thing is that link does help support out the channel, but also gives you a nice little bonus. All right, so now let's go ahead and check out and see how this portfolio is doing. So here we are on the platform. I'm personally using M1 Finance, which is the investing platform that I personally love when it comes to dividend investing. I'll have a link for them down below if you want to check them out. It is fantastic for dividend investors. Right now, you can see that my portfolio is currently valued at $14,549.34. That's awesome. So right now, don't worry about this return percentage. I personally don't really pay attention to it. But this right over here, this is my total gain since I've had this portfolio. So it's about $1,689.64. Just for some people that might not know the way this percentage works, or sorry, this dollar amount works, is this is money weighted, which means if I sold a stock for a profit, that is accumulated into this total right over here, where if I just went into my holdings tab over here, I can see my unrealized gains are right over here, which is $1,131. So effectively what this is saying is that there's actually been about $400 or $500 over here that's in this portfolio that has been profit that I've just reinvested. So I sold some stocks, made some money, and then put it back into this account. So I actually like this money weighted return over here when it comes to the gains. So far, you could see out of that $1,600 in gains, $134.36 has been dividends. Now, I do love dividends, but I also am not hyper focused on dividends because of my age. I'm also trying to build up some growth on the portfolio, and we'll kind of break into that here in a little bit with some of the different sectors that I have so we can see everything in total. So that's, of course, in the overall time period. Over the last week or so, it's not been as great. We're down about $373. But the last month, we're still actually up $466. So we've had kind of a rough week this week. So the nice thing about that is when we have dips in the market, I tend to like to buy more just because then that way I get more value from my stocks that I'm purchasing. So if we scroll down here, we can see like some of these dollar amounts. Again, I don't focus so much on the percentages as I do on those dollar amounts because that will help indicate, where I have some opportunities for me to purchase. So as an example, we're going to go into our tech sector here. And our tech got hit pretty hard this week, just in general across the board. So you can see with like Apple, we're down $44. Microsoft, we're down $53. And then with AT&T, we are down $26.41. So all of these, of course, are down, which means that if I'm buying in, I am dollar cost averaging. Hopefully that if I can, get them at a nicer price, and if they go back up, I just get all those additional gains on top of that. So I have been doing that. I've actually been buying a lot more into Apple and Microsoft as of late. If I go into my activities here, we can see, I was looking at Aflac for some stuff. So we can see here, I did a trade here on the 20th of October for 175, but 3 cents didn't go in. And you can see, so I did AT&T, I did Microsoft, Amazon, Apple, Facebook, and Realty Income. A majority of that went into Apple by themselves. So I bought in for $115.99, which was about 0.86 shares. 0.86 shares, yeah. So it's 86% of one share of Apple. So technically, my dollar cost average actually went up, but still at a really great price from their 52-week high and where I, can see them going for the long term. Same thing with Microsoft. I bought only $15 worth of Microsoft that day, but nonetheless, if I go, let's see, back on the 19th, I bought another $25 worth of Apple, a little bit into Microsoft, AT&T, a little bit into Ross, and then Next Era Energy as well. And then I did on the 16th of October, we did 15 buys for $177. And this one, I kind of let M1 Finance do its normal thing where it gets split up across the board. with a few exceptions. I did a little bit into Tesla, Microsoft, and then I did, where was it? Apple as well. Not a lot into Apple that day, but it was about $12 manually into Apple. But yeah, the rest of that was just split in between all the different companies. So like NEE got quite a bit of that because that was a newer stock that I was adding to the portfolio there. And then we had like Starbucks, Home Depot. So a nice kind of like split across the board with all of these different funds. So those were mainly the purchases that I did over the last few weeks. And as you can see here, I also did get a dividend back on October 15th from Realty Income, which is my monthly dividend paying company. I made about $2.47. October tends to be a very low month in dividend payouts, so I'm not expecting a lot of money this month. Although it is a healthy amount, it's just not going to be a lot in comparison to other months. But it's okay because, again, we are playing the long-term game here where even though we're not making a lot in dividends right now, the premise is to get into companies that are going to have some good dividend growth over time, as well as just growth in their actual value across the board. But the nice thing as well too is dividends do get me very excited about continuing to invest all the time. And I'll show you what I mean by that. So on October 15th, I got that 247. So then the very next day, I was actually very interested in depositing more money, so I put 175 in, and then the total trade that next day was 177.36. So obviously the dividend went in plus my deposit. So I get very excited that when I have new dividend payouts, I tend to want to deposit more money in, so that way my dividends as well as those deposits that go in that day get pulled into all of my portfolio. So I know some people don't like dividends because they want to just focus in on the growth, and that's great. So obviously everyone has different investing strategies, so just something to keep in mind. For me, yeah, those dividends just really get me excited to keep on investing. Because if we look here, if I go to my dividends only, so obviously, like I said, Realty Income was the last one that paid out. I only have one more dividend paying stock this month at the end of October, so I'll do a update once I get there. But right before that was October 1st. It was ADP for $2.04 there. So, but you could see all of these different dividends that get paid out. I just get really excited about them. They make me excited to keep on investing, to see the growth, especially with companies that I'm building up over time with. So if I go into here and I look at Realty Income, so this is a monthly dividend paying stock. So I get it paid every month, but you could see here my last one was that 247. Just a month ago was $2.09. Before that was $1.93. And if we jump back to July 15th of 2019, so over a year and some change ago, it was a nickel. So I went from 1 month getting paid a nickel to all those deposits to one day getting $2.47. And that's just with one company. Of course, there are others that have that same kind of growth over time. So if we look at other ones that we've been having for such a long time, we're going to be able to see that different growth. Like we can even see with Microsoft, because that was actually the first stock I owned in this portfolio. So this doesn't pay every month. This only pays out once a quarter. So the very first one was on March 14th of 2019 for 2 cents. Not a lot of money, but got me excited to invest. And then right now, the latest one was September 10th of 2020. And that one was for $2.20. So a whole $2.18 more than I got paid out. Obviously quite a long time, but when we're talking about investing for the next 15, 20 years to have money, down the road, this is going to be something where I'm trying to build up, where I'm getting paid out this amount of money in increase every single year, every single quarter that I can, because I'm constantly investing in these companies to have them paid out. Now, for us, the goal is to hopefully in the next 10, 15 years have enough where we're earning well over $1,000 every single month, so that way we can be utilizing that money for anything we want or need or whatever the case may be. But that's just going to be another form of passive income for us to be able to have whenever we need to utilize that money, or maybe at that point we'll have money in other areas so we can just reinvest those dividends, because reinvesting dividends can really grow a portfolio even faster just because of the compound interest that happens time and time again. All right, so if we are going through here, we can see we have our growth sector over here as well. So this is only 14% of our portfolio. This might grow over time as we keep getting more comfortable with this pie here. You can see that right now Tesla has overtaken this pie quite a bit, mainly because of its growth. We've had over $219 if we sold today in profit. I'm not planning on selling at this point. I've done that before in the past where I've bought in like Tesla stock and then sold it for profit. This time around, I think I'm going to be keeping it for a little bit longer if I can. And then we're going to see here we have Amazon, Google, and Facebook. All of them in their all-time right now are doing fairly well. We did have a point where Google was down for a while, so I was investing a little bit more. But with these bigger companies, the hard part is when you kind of click in here, like for Amazon as an example, even with $430, I only own 0.13 shares, which is about 13% of one share. But the cool thing is, and this is what I love about fractional shares, is that $24 in gains, even though that's not a lot, for one portfolio and for that $400, that's still a healthy growth, especially with the opportunities that Amazon might have down the road as it continues to grow and grow. So for me, being able to buy into fractional shares is probably one of my favorite things about M1 and any platform that allows that, just because it gives you the opportunity for your money to actually continue to grow, even if it's in small dollar amounts, because, hey, I think, yeah, look at that right there. Amazon is at $3,217 per share. So for me right now, if I had one share because of my portfolio right over there, that's a huge portion of the portfolio altogether, which would be too much for me invested into one company. So for me, being able to split it up with all of these other stocks makes it really advantageous for me to be excited about, having ownership without having to pay the full entry price point, which is that $3,000 something. So that's always nice. I like that. Obviously, I'll continue to be investing in them. I do hope to eventually have a full share, but obviously with it being kind of the caveat that it's also, my portfolio is much larger, so that one share of Amazon won't be like a huge portion of the overall pie. Because right now, when I take this into consideration, if I go into my holdings, if I go into like cost basis, right now, my Vanguard ETF, which is VOOG, actually has the majority of the funds as far as percentage. So this one has $1,400 in here, which is pretty much 10% of this portfolio. And then right following up after that is Apple, almost at that same dollar amount, about $1,395. And then Microsoft a little bit behind them there. Now AT&T is up there as well. I don't know if I'm going to continue to invest heavily in them or if I'm going to slow down. Right now their price point is pretty crazy. I did like them for the longest time, and I still do like them, especially for their dividend payouts. But right now they're at $26.76. My dollar cost average is $30. So right now, if I bought into them, I'm actually going to drop that dollar cost average quite a bit. So I don't know if I want to keep on investing in that or put into companies that are having a lot more healthy growth, because AT&T has not been doing that as of late. So I don't know if I want to continue to do that. Now, obviously, with this whole portfolio, there's a lot of ups on the majority of them. But on my holding side over here, if I go to unrealized gains, flip it across here, I have 4 stocks that are technically down across the board just on the unrealized side of things, not including dividends, because if you include dividends, it would actually, I believe, take out Lockheed Martin from the negative side of things. But right now I have VOOG just in the negative only because I sold VOO and went into VOOG at obviously a certain time when the market was going down, AbbVie, and then AT&T. So those 3 are the main stocks that I'm technically down in if you are considering the dividends that I got paid out. Still not terrible, obviously, across the board. I have a few stocks that haven't had a lot of growth, so I'm kind of considering whether I want to keep them or not. I really do like Aflac as far as the dividend payout because they're very safe, but they haven't had a lot of growth in their actual stock value, so it's really tough sometimes when you're sitting there and seeing that I've only had $3.18 of unrealized gains. But at the same time, if I go into here, where is my dividend? Let me go ahead and actually check really quick. If I look at Aflac right now, I've earned $5.52 in dividends from them. So I've actually earned more in dividends than I had in actual value for the stock going up. So things to kind of consider. Is that worth it now, or should I, move this out of there and maybe put it into something like Ally or Discover that's had a lot better growth in my portfolio than this stock. So just things that I had to consider, and obviously as I make those decisions, I'll share them with you. So make sure you have that subscribe button hit down below so you can follow along through this investing journey. Now I want you to keep on watching more on the channel, so check out my next video right over here. My name is Dennis, and I will see you in that next video.